Okay, so let's look at section 20A. When is it applicable? To who it applies? So first up, section 20A, this ring fencing section, is only applicable to natural persons. So it's not applicable to companies, trusts, etc. Only natural persons. And they are natural persons who are paying tax at the maximum marginal rate. Now, what is the maximum marginal rate? The maximum marginal rate is the highest tax rate which is applicable to natural persons. And you can always find it in the last row, basically, of the tax table relating to natural persons. Now, this amount can change, and you'll see I've taken just a couple of examples here from different tax years where it's gone from 40% to 41% to 45%, and that can and might and will probably change in future as well, maybe go up, maybe go down. When do you pay tax at that rate? Is when your taxable income exceeds these amounts stated here. Again, that's adjusted all the time. So, a natural person who's paying tax at those rates may consider section 20A. Now, what's important for you to understand here is that they tell you in section 20A that it is the taxable income before taking into account any assessed losses that you should consider. So what do I mean by that? So let's say a person has a taxable income of 1.6 million rands and he has a section 20 loss of 400,000 rands. So that might be carried forward from previous year, it might be in the current year. That would mean when we do the tax calculation, taxable income calculation, we want to say it's 1.6 million minus 400,000 is 1.2 million. But that is not the amount that we use to determine if the person is paying tax at the maximum marginal rate for the purposes of section 20A. No. What you need to do is you need to use the 1.6 million rands, which is the amount before taking into account the losses. Because the whole point behind section 20A is you want to understand if they would be able to claim that loss in the current year. Or if it's from a past year also, obviously the past years you can claim, but you need to know if the person can claim current year losses from other trades. Now, that's an interesting part of this section because this means that if you're not paying tax at the maximum marginal rate, so if you're paying tax at, let's say, with a 36%, then you can claim assessed losses from other trades as much as you want, even if it meets the requirements from the rest of section 20A, as we'll see in a second. It only applies to you if you're in the maximum marginal rate. So when does section 20A apply? What are the requirements of it? Section 20A2 gives us this information. Now you'll see section 20A2 is split into two parts. Section 20A2A and section 20A2B. And it's either one or the other will be applicable. So either you're going to look at this which says a loss in 3 out of the 5 years, or you will look at the suspect trade. Now I've just copied in these different parts of the act here just to bring it in. So let's just quickly start with section 20A2, just the introduction. It says subsection 1 applies. Subsection 1 is where it tells you that you must ring fence it if it's applicable, where the sum of the taxable income for a person determined without having regard to other provisions and any assessed loss and balance of assessed loss, which was set off in terms of section 20, equals or exceeds the amount at which the maximum marginal rate of tax is chargeable. So this is what we've already discussed. You have to exclude any of the losses that might have been incurred. Again, it's this concept. If your salary is 1.8 million and there was a loss in there of 400,000 from a trade, that gives you 1.4 million. You have to add the loss amount back to get to the taxable income. And if that taxable income puts you in the maximum tax bracket, then this section can apply to you. And then where either A or B applies. Now you'll see on this side over here, I've given a little example, and that is what you need to be able to answer when we're done here. So I say a taxpayer earns a salary and carries on a separate trade. So here's the salary, here's the separate trade. When will the taxpayer consider ring fencing the loss under section 20A for the first time? If the trade is not a suspect trade and the trade is a suspect trade. Now what I want you to understand already here is that over here this is when trade is not a suspect trade. We'll talk about what a suspect trade is in a moment. So what this section tells us of here, it says, this section will apply if that person has, during the 5-year period ending on the last day of that year of assessment, incurred an assessed loss in at least 3 years of assessment incurring on the trade contemplated in subsection 1, before taking into account any loss. So what they're saying is, if you've made a loss 3 times within the last 5 years, and you include the current year of assessment, then it is ring-fenced under section 20A. So what does that mean? So let's start here in year 1. So again, what this person now wants to do is he wants to claim the loss against his salary. Okay, so salary, 2.1 million, 2.2 million, 2.3 million, 2.4 million, and 2.5 million. And then we have this trade now. Okay, so let's see what happens. So in year 1, this is not a suspect trade. So in year 1, can this person claim that 300,000? Now what I want you to understand here is it can just add this year, and that is to say, assume person is in max marginal rate. So I'm trying to tell you, assume everything else is met. This person is being taxed in the maximum marginal rate. Okay, so in year 1, you look at that, you say it to yourself, if I look at the current year and the 4 previous years, so that's 5 years, current year and 4 previous years. That's what they talk here about, that year. That year means the current year. Has the person made a loss in 3 out of the last 5 years? Now in this case, the person has made the loss for the first time this year, so they can claim it. Then year 2, the person makes a loss again. So now you look at the current year, the previous year, and the 3 years that came before that, so 5 years in total. Has the person made a loss in 3 out of the last 5 years? No. The person has only carried on this business for 2 years, so the person can claim that loss. Then in year 3, the person has a taxable income. Year 4, the person has a taxable income from the trade. And then in year 5, the person makes a loss again. So now, what we do is you look at the current year. 1, 2, 3, 4, 5. So has the person made a loss in 3 out of the last 5 years? He's made a loss in 1, 2, 3 years. So in that case, in year 5, section 20A will apply and the loss will be ring-fenced. So that 200,000 rands will now never ever be able to be deducted against the salary of the person. Even if the person is no longer in the maximum tax bracket in future, this specific 200,000 from year 5 will always be ring-fenced. So what I'm trying to say there is, let's say in year 6, the person makes a loss again. Okay, but for some reason, let's say their salary has gone down a lot. They only earn 300,000, so they're not in the maximum tax bracket anymore. So what I'm trying to say is, assume just from this quick little discussion that they are no longer subject to section 20A. That 300,000 may then be deducted, but that 200,000 over there is still ring-fenced. You can only deduct that against income from the trade. So once something is ring-fenced, it's ring-fenced. So that's the 3 out of the last 5 years rule. Okay, now B talks about suspect trades. Now, if a trade is a suspect trade, it will basically be ring-fenced or potentially ring-fenced immediately. In other words, you do not have to wait for it to to make a loss in 3 out of the last 5 years. So if this clause example I say here, we say, my question was here, when will it be ring-fenced for the first time? If it is a suspect trade. If it is a suspect trade, in year 1, section 20A already applies. So it's ring-fenced. Okay, so I want you to just quickly see here. So trade. So year 1, that is ring-fenced. It means we will carry that 300,000 forward to next year. Year 2, we make another loss. So this is a suspect trade, so it's ring-fenced. So year 2, we carry it into this trade. So now this trade has 610,000 rands as a loss. Then year 3, it is not ring-fenced because it's an income. So then our income in year 3 is the taxable income of 150,000, and we can deduct that 610 against it. So you see what happens? You only deduct it against the income. So 150 minus 610,000 is 460,000. Okay, so that's carried forward. Year 4, we make a taxable income, year 4, of 160,000. We carry that 460,000 across. So now we've got a loss of 300,000 rands. Year 5, so what I'm trying to show is it's still ring-fenced because we're still in a loss position. Year 5, we make another loss of 200,000, so it is still ring-fenced. So we'll just add it to that 300,000. So in year 5, our loss is now the 300,000 balance that we had minus the 200,000 from the current year. So now we have a 500,000 balance. And we'll continue rolling that forward and trying to use it up, but you can only use it up against income from the trade. So again, just as a quick little reminder, if this is a suspect trade, then it is ring-fenced immediately. You don't wait for 3 out of the last 5 years. So what is a suspect trade? A suspect trade is a trade which SARS views with some suspicion. In other words, it's something where they go and they say, we think that there's always going to be a risk, or there's going to be a big risk of making a loss from it. So let me explain to you what I mean by that. SARS is happy for you to deduct a loss that you make from a trade against your other income, like your salary. They're happy for you to do that. But they want to know that that loss that you're making is because you're generally trying to carry on a proper trade. If it's something which they view as a way that you're not going to make an income, there's no chance of it, really, then they don't want you to do it. So they give you basically this 3 out of the last 5 years. They say, listen, we give you 5 years. You must not make a loss in 3 out of those 5 years. Then we'll be happy for you to take the losses. But if it's a suspect trade, they want to do it immediately because they're suspicious of it. Now, what is important for you to understand, this suspect trade here, you can't in an exam assume and make up your own mind about what a suspect trade is. If it is listed here, it is a suspect trade. If it's not listed here, it's not a suspect trade. So let me explain to you what I mean by that. Of course, a lot of us, we accountants, we think in terms of very practical things. So if they tell you, for example, Mr. A earns a salary of 300,000 or 3 million rands, and he also has a business where he bakes cakes in the shape of puppies. Okay, stupid example, but cakes in the shape of puppies, and that makes a loss of 200,000. Don't go and look at that and go and say, that sounds like a ridiculous business. It must be a suspect trade, so it's ring-fenced. No. If it is not listed here, it's not a suspect trade. Okay, so what are the suspect trades? The first thing is a sport. If you carry on, if your trade is a sport, then it's a suspect trade. So what does that mean? Why do you think that's the case? It's because of things like this. So here's Mr. A. He earns 300,000 rand or 3 million rands a year in a salary. he likes to play golf. Okay. Now he says, I'm going to enter a tournament where I can potentially win 500,000 rands. But there's all sorts of costs that you have to incur. Cost of being a member of the club, and let's say it's an expensive club. It's 20,000 rands per year is the cost. There's entrance fees, right, and that's 10,000 rands. You pay the person to carry your golf clubs around, which is 5,000 rands, etc. Right, so let's say it's 35,000 rands of loss costs. There's a big chance that this person potentially might not win that 500,000. So what they then say is, we don't want you to just go and deduct your hobby costs here, your sport cost here, and say, oh, I made a loss, sorry, I didn't win, so I made a loss, there we go. That's a suspect trade. Because they suspect that people, a lot of time people play sport because they want to play sport, and not because it's a proper trade. So obviously if this person did win, they'd have to include the 500,000. But then, if it's not a capital nature for whatever reason, but then I can claim also the 35,000. So sport is suspicious. Dealing in collectibles. Okay, dealing in collectibles. So here's a person. Right? Like me, and I like having superhero figurines, right? So a little Superman, standing there, right? I like figurines, let's say, statues. I can view it as a collectible. So now I say, I'm going to collect all these toys, Batman and Superman and whatever those things might be, and whoever they might be. And if I find a collector, I can sell it to them. That's my business. I want to make a profit on that. So I buy all of these collectibles and things, and then I try and sell it, but I don't sell a lot of them. So now I claim a deduction for these things. For all the cost incurred, the cost of insuring them, the cost of keeping them clean and displaying them, so the water, electricity, whatever the situation will be, the cost. Collectibles is considered to be a suspect trade. So from day one, there will be, if I make a loss, it's an issue. The rental of residential accommodation. Now this is an interesting one. So they say, if you make a loss from renting out accommodation, so you own a flat, you rent it out to people, you earn rental income of 10,000 for the year, but your costs, water, electricity, rates and taxes, the finance costs of 50,000, let's say. So you make a loss of 40,000. They say that's a suspect trade. But look here, unless at least 80% of the residential accommodation is used by persons who are not relatives of that person for at least half the year of the assessment. So what they're saying is, if you have a rental property and you rent it out to people who's not family, you can make a loss. It's not a suspect trade. But they are suspicious of it when you are renting it out to your family members. Because I might now have a little house at the coast, at the sea, which is actually my holiday home, but I don't tell SARS that. It's actually my holiday home. And that thing costs me all sorts of money. It costs me 50,000 rands for the year to own it, let's just say. And now I rent it out to my mom and my dad and my brother and my sister. And I say to them, they each going to rent it for 20 days. So let's say they rent it out for 100 days. And I say to them, you only need to charge me, I'm going to charge you 1 rand a day. So my income is 1 rand. Why? Because I just want to give my family a nice place to go and live for a little bit also. And it's actually a holiday home. So I make a loss. That's a problem. If I rent it out to people who's not family for at least half the year, and more than 80%, so at least 80% of that amount is to people who is not family, then it's not an issue though. They don't have that as a problem. The same goes with the rental of vehicles, aircrafts or boats. Right, it's suspicious unless you lease it out at least 80% of the time to people, and for at least half of the year to people who are not relatives. So again, if it's not your family involved, it's a proper business. Animal showing. Right, animal showing. So right, here is Sarah. Most of you guys do know a Sarah. That's at SEA campus. And this Sarah loves cats. Okay, she loves cats. A bit of a crazy cat person. She likes to take these cats and go to animal shows. So at an animal show, basically they look at everybody who's crazy enough to take the animals there, and they say which one is the prettiest or the best looking or the most pure, whatever the case might be. Right, those animal shows, you can win some money, but there's obviously all sorts of costs involved as well, so which can put you in a loss position. Animal showing is considered to be a suspect trade. Farming or animal breeding. So Sarah, crazy person, likes to have her cats breed with each other so she has more cats. And then sometimes she sells some of those cats to people. But there's obviously lots of costs involved again. Food, insurance, vet bills, all of those things. Right. That is considered a suspect trade. But look here, unless that person carries on farming, animal breeding, or other activities of a similar nature on a full-time basis. So if you're a professional farmer, so you're a full-time farmer, then you also are animal breeding. That's a different story. That's not a suspect trade. So that would be subject to this 3 out of the last 5 years rule again. Any form of performing creative arts. Okay, so this is a canvas, right? So a piece of material. I like to strip myself naked, cover myself in paint, all these nice colors, because I really like how it feels on my skin. And then I go and I roll around naked on this piece of canvas, and then I try and sell it. The paint costs me 50,000 rands for the year. And I try and sell this thing, but not everybody's interested in buying paint that's actually just my naked body rolling around. So I sell it for 1,000 rands. So again, I make a loss here. This creative art, anything like that, is a suspect trade. Okay. Any form of gambling or betting is a suspect trade. And then, guys, interesting, especially in modern times, the acquisition or disposal of any crypto asset. So things like Bitcoin, considered to be a suspect trade. So if it is a suspect trade, you don't have to wait 3 out of the last 5 years. It will be potentially ring-fenced immediately. Now, as we go on and look at the rest of Section 20, as we'll see in a second, there are ways in which to avoid this. So, for example, what I'm trying to say here is a person that is truly investing in crypto assets or performing creative arts or animal breeding, all of these things we saw, these suspect trades, including these 3 out of 5 year rules. There are ways in which it will not be ring-fenced, but it just takes a little bit of extra work from your side. Again, SARS wants to know that what you are doing is a proper business or a proper attempt at a business, and then they are a bit more forgiving, as we'll see.